Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. It is Monday, it is February the 22nd, and as probably all of you know by now, Oxy reported after the closing bell today and reported some numbers which, according to some people, were quite disappointing. But in order to be fair, and in order for you not to call me an analyst schmanalist, I thought we would take a few minutes and dive into the 8K and just kind of see for ourselves what's actually going on and what it is that Occidental reported. One of my accounting profs at university once said, the meat on the bone is in the notes below the balance sheet and not in the numbers on the balance sheet. Regrettably, tomorrow is the opportunity that we have to listen to the sort of notes on the balance sheet, if I could put it that way, when Vicky and the team actually do their earnings call, which is going to be at 1 p.m. Eastern Standard Time on February the 23rd, which is Tuesday. Now, I say regrettably because, unfortunately for me, I have a board meeting that I have to attend at 1 p.m. Eastern Time on February the 23rd. So probably for the first time in a long time, I'm not going to be able to join the earnings call. But what I will do is obviously check in afterwards and take a good look and a deep dive into the pitch deck from the earnings call. What we want to do now is take a quick flyover and look at the 8K. The 8K has approximately 19 pages. I'm going to go through 16 of them. We're going to skip the last three. And in order not to bore you entirely to tears, I have already read through the 8K and highlighted the things that I want to share with you. So in case you think I don't have a life, I actually don't. But that's what we're going to do from here on in. So stick with me and I'll walk you through the 8K. All right, guys, this very exciting piece of paper here that you can see on the screen right now is the proverbial ink on paper that represents Occidental's 8K that they filed with the Securities and Exchange Commission. And of course, the date of the report is February 22nd, which is today. So what I've done here is, as I said a minute ago, this 8K is approximately 19 pages long. We're first going to look, we are only going to look at the first 16 or so. So I'm kind of scrolling. This is one of those pages that are intentionally left blank. I have no idea why lawyers sometimes do that, but anyway, there you go. Let's go some more and see if we can find the good stuff. So here's the news release. So news releases are kind of like political statements, so don't attach too much value to this. We're going to go into the financials in just a second. Occidental says they confirmed $2.9 billion capital budget to sustain 2021 production. In other words, they're confirming it because that's what they said before, and they're holding that line on 2.9 as their capital expense budget for 2021 production. They used net proceeds from asset sales and cash on hand to repay $2.3 billion of debt in the fourth quarter. Good job, Oxy. They raised $2 billion in senior unsecured debt and extended $2 billion of near-term facility maturities, I beg your pardon, in the fourth quarter. Good job, Oxy. Production of 1.143 million barrels of oil equivalent per day from continuing operations exceeded the midpoint guidance by 13 million barrels of oil equivalent per day. And they reported an adjusted loss attributable to common stockholders of $731 million or 78 cents per diluted share. So this is a loss of 78 cents per share. I actually thought Oxy would do much better than this on an EPS basis. I thought they'd come in at about negative 30 cents. Anyway, I'm not an analyst, I'm not an expert, but it'll be interesting to see anyway why we ended up at a loss of 78 cents per share, which, by the way, may look bad on paper, but it ain't that bad at all. So let's take a look at what's going on here. Quarterly results. Oil and gas pre-tax loss on continuing operations for the fourth quarter was $1.1 billion. The fourth quarter results included a pre-tax loss of $820 million, so that's almost $1 billion, related to the sale of non-core assets in the Permian Basin. For the fourth quarter of 2020, average WTI and Brent marker prices were $42.66 and $45.24 per barrel. Pretty good, huh? We know Oxy is making money at 40 something per barrel, and right now, for what it's worth, WTI and Brent are kind of running at around $60 or $60 plus per barrel. Average worldwide realized crude prices increased by approximately 5% from the prior quarter to $40.77 per barrel. And then you have the gas price increase approximately 1% from the prior quarter to $14.95 per barrel of oil equivalent. Today, as we speak, the prices for WTI, Brent, and NGL are significantly higher than what they were at the end of the fourth quarter. And that is good news, my friends. OxyChem, this money-making machine, had a pre-tax income of $192 million for the fourth quarter, which exceeded guidance. OxyChem always does well. In fact, OxyChem is one of the little divisions of Occidental Petroleum that is a cash cow. Midstream and marketing, pre-tax loss for the fourth quarter was 90 million compared to a loss of 2.8 billion for the third quarter of 2020. That's a marked improvement, but we already know in accounting you have a whole variety of ways in which you can show marked improvements, or you can kind of write off costs like impairments that don't really affect your cash position. So this is a disclaimer, blah, 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 blah. We're not going to go through the entire thing. Some more blank pages. And then we have a table of contents here. So you see, I'm actually going really, really quick because I said I'm going to talk about 16 pages and I'm already on page gazillion. So here's the summary highlights from Occidental Petroleum. Quarterly net income, loss in brackets, of course, reported income or loss attributable to common shareholders. Now look at the way in which this number is improving here. I'm only highlighting from the second quarter through the fourth quarter. And of course, the current quarter that we're in, which by the way is almost 2/3 finished, might be significantly better than even this quarter. But look at the difference here from a loss of $8.3 billion in the second quarter to 3.8 or so in the third quarter, now to 1.3 in the fourth quarter. How about the earnings per share on a diluted basis? In the third quarter, negative $9.12, then $4.07, and now $1.41. It kind of looks okay to me. You know, it looks like a company that's on the up and staging a recovery. Adjusted earnings per share diluted on a non-GAAP basis, negative $1.76 in the second quarter, negative 84 cents in the third quarter, now 78 cents. Improvements all the way through. How about the bottom line here? Operating cash flow, 365 million, then 815, then 1.3667 billion. So here we can see the operating cash flow from the second quarter of last year, so 2020, to today, in terms of what's reported, almost a $1 billion change in operating cash flow. It looks like a pretty good story to me. Operating cash flow, this is based on year to date. Right at the bottom, operating cash flow, second quarter last year, 1.6 billion, third quarter, 2.4 billion, fourth quarter, 3.8 billion. You know, you don't have to be a rocket scientist to know that this is a company that's doing better, better, better all the time as the prices of oil and gas are going up. Asset impairments, that big write-off that we saw in the second quarter, negative, resulted in a negative $5.5 billion loss. And then we go down to 21 and just 87 in terms of asset impairments. And how about the losses on sales? We had a $14 million gain on asset sales in the second quarter. And then as they started divesting of some of the non-core assets, I think the big Q4 asset sale that caused this $850 million loss here is the Colombian assets, which are now gone. Let's go to the bottom of the page here, or towards the bottom. Loss from continuing operations was in the second quarter last year 5.3 billion, in the third quarter 3 billion, and now $618 million. Is this making you feel warm and fuzzy yet? It's kind of good, huh? The picture gets better all the time. How about the income or loss from continuing operations before taxes? Q2 negative 8 billion, Q4 negative 4 billion, now negative 1.4 billion. How about the net income or loss? Similar to the line I just read above. How about the net income or loss attributable to common shareholders? From negative 8.3 billion down to negative almost 4 billion, down to negative 1.3 billion. I guess by now, if you're not bored yet, you probably you're feeling a little bit, at least slightly warm and fuzzy, huh? How about the adjusted income or loss attributable to common stockholders? In the second quarter of last year, that was 1.6 billion. That's to us guys. And then in the third quarter, 83 million, and now 731 million. Things are improving as it doesn't matter almost which line you look at. It looks pretty good quarter over quarter. And not that, the quarterly results really matter in the greater scheme of things. I'm just going through the 8K because it's brand new. But in reality, I mean, you got to take into consideration that this is a 100-year-old company with extraordinary assets, and a company that definitely prints money at $50 or above on a WTI price per barrel basis. Reported diluted earnings or loss per share, $9.12. Remember that one, guys? Q2 of 2020. It seems so long ago, right? Q3, $4, and now $1.41. You see the improvement? Can you feel it? Net loss attributable to common stockholders with incomes affecting comparability included, 6.3 billion down to 3 billion, down to 581 million, soon to be zero net loss. What else is on here? Let me see if I've highlighted anything else. Oh, a little bit more. Of course, I haven't even gotten here yet. Revenue and other income. So you can see the total revenue here. Second quarter, 3 billion, uptick of about 10% in the third quarter, a little uptick again in the fourth quarter. Looking pretty good. Loss before taxes and other items, 8.3 billion in the second quarter, 4 billion in the third quarter, 1.7 billion in the fourth quarter. Things are on the up for us, the Oxy guys. Let's look at the balance sheet. Current assets, cash and cash equivalents. Remember June last year, they said they have about $1 billion in cash and they have a $5 billion undrawn facility. Well, seems like they didn't even use that undrawn facility yet. And so that $5 billion is still available. At the end of September, they had almost $2 billion in cash. And at the end of December, it looks like a date, but it isn't. They have over $2 billion in cash and cash equivalents on hand, or had, as of the end of December. Imagine what they got now. It's already almost the end of February. Current liabilities, long-term debt was 2.4. Then it crept up slightly to 2.5. These are current maturities of long-term debt, now only 440 million. And long-term debt for Occidental was 36, down a little from 36, $36 billion for Oxy at this rate where they're currently making money is very, very accommodating and not over-leveraged at all. Let's see, consolidated condensed statements of cash flow and detail. Operating cash flow from continuing operations, end of Q2 of last year, 365 million, up to 815 million, and now at the end of Q4, 1.3 billion operating cash flow. Investing cash flow from operating continuing operations was a loss of 565, then a loss of 268, and now a positive 1.589 billion. I've probably said warm and fuzzy at least twice, but this is pretty good reading for me. Cash and cash equivalents and restricted cash and cash equivalents at the end of the period was 1.2 billion 3 quarters ago. 2 quarters ago was 2 billion. Last quarter it was 2.2 billion. Not bad, huh? Free cash flow down here at the bottom in the third quarter, 815 million. At the end of the fourth quarter, $1.367 billion. That's where I'm going to wrap it up, guys. I think that's enough of reading of the 8Ks before I put you all to sleep. All right, guys, there you have it. This is Occidental as of February 22nd. It's looking pretty good, sitting at around $25. I don't want to make predictions, but this kind of looks like we have oil edging up and up and up. It's already at 60 something dollars. We know at that current price level, Oxy is making a lot of money. But let's see where we go. Tell me what you think in the comments. Are we ready for liftoff? Is this the big turnaround moment that we've been waiting for? Certainly, as I go through the 8K, most of the quarter over quarter results look very positive to me. And you could say if the company's earnings didn't meet the analysts' expectations, maybe the analysts over anticipated what the company would deliver. At the end of the day, the company's not trying to match the analysts' expectations. It's the analyst's job to try and predict the expectations. So in the greater context of things, it doesn't really matter. Anyway, let me know in the comments what you think. I look forward to chatting with you and connecting with you. Thanks for watching. And remember, if you're going to be joining the earnings call and WebEx tomorrow, have fun. You can always send me a note on the YouTube channel, and I will have to check in later after the board meeting tomorrow afternoon and catch up. And I'll put together something interesting for you once I have access to all the web information shared tomorrow. This is Mr. Oxy signing off, saying take care, keep well, bye-bye.